Hello friends, this is Raj Satri from Raj Option Trading. Today is August 16, 2021. We will look at stock and option purchasing ideas for the week of August 16. With that, we will look at a TTM Squeeze Indicator by John Carter. It will help to identify a good time to buy stock, call or call spread. So the reason I love TTM Squeeze Indicator is it tells you when the market is going to switch from a trading range to higher or lower. So with that, if you look at this stock here, we got a stock which is in the trading range for a while, and we got a TTM Squeeze Indicator right here, and as you can see here, stock went up after that. So it really tells you what's the good time to buy the stock and when it is going to shift from an existing trend to something different. So that's why you don't need to wait so long holding the stock. Instead, it tells you, hey, you know what, it's a good time to buy now, and then you can buy based on this indicator. So with that, let's jump in and get started. So as you look through here, we got a stock called CLF here, just as a illustration here. And as you can see, a stock has been doing pretty great. Typically, the way I like to use this indicator, I like to look at multiple time frames. As an example, I got a 1 year, 1 day chart here. I got a 2 year, 3 day chart, and a weekly chart, which is 5 year, and a monthly chart. The way to read this indicator is, the first section here is really the TTM squeeze indicator. The moment you see a red dot here, that means it's a tight compression of volatility. At this time, the Bollinger Band is inside curtain channel. Energy has to be released either higher or lower. The first green dot after red dot or a series of red dots will indicate energy is going to be released, and the Bollinger Band is just coming out of Calton channel. And you have to also look at a short-term A wave. A wave indicates short-term trend. Once A wave crosses above zero, that's a bullish sign. As you can see here, we got a red dot here. As the red dot comes, we got a shorter term A wave above zero. That indicates a bullish sign. And typically a yellow bar in the short term A wave represents bullish, and red bar indicates bearish. So then we got a longer term C wave. As you can see here, this is a section for C wave. C wave measures the long term trend. Once C wave crosses above zero, that's the bullish sign, and otherwise it's a bearish sign. For example, here, when the dot happens here, C wave is pretty much above zero. That tells you at this time it's good to go long and buy stock or a call option or a call spread. John Carter says don't pay too much attention to the short term C wave. Instead, trade in the direction of the A wave. If A wave is above zero, buy stock, call option, call spread. Otherwise, you could even go short if it is below zero, or buy put option. And similarly, you have to look at a 3 days chart here. If you're a trader who look at a little bit longer term swing trading horizon in terms of 3 days, 6 days and whatnot, then you can look at a 3 days chart here and see what's going on here. As an example here, we got a lot of dots going on here in the 3-day 2-year chart. And when that happens, longer term C wave is above zero. That's a bullish sign. You could go long at this time and buy call stock or call spread. And similarly, you can look at if you're a little more longer term trader. For example, you swing trade in months as an example. You could look at monthly. As you see here, we got a squeeze or a dot in the monthly chart here that tells you at this time there's a tight compression of volatility. And when that happens, you got here C wave perfectly above zero. That tells you you can buy stock, call or call option. The trend is going to continue for a couple of months. And then we got here CLF, a 10-year monthly chart. Same story here. When you see a dot, that means tight compression of volatility. And when that happens, if the longer term C wave is above zero, that's a bullish sign. The moment you see first green dot, that tells you now Bollinger Band is coming off of Kelton channel and trade in the direction of the A wave. If it is above zero, go bullish. And also, for few things to notice here, best squeezes are the ones that fire off in the direction of C wave. Always pay attention to C wave. If it is above zero, be bullish. And if you want to buy call option, make sure IV percentile is below 50, so that way you don't pay too much money for the call option. And also typically make sure RSI is below 55, so that way stock is not overbought at the time and there's more room to run. And also pay attention to how stock has responded to squeeze in the past. So if the stock is not responding well to the squeeze, you can pass the stock and look for next opportunity. So with that, let's get started. Look at few stocks here. So as you can see, I got here list of stocks. First on the list is NEO. I also highlighted few stocks with the with the gray background here. Those are the ones you can look at and probably go long. Those are the candidates to buy stock itself outright, or call option, or call spread. So with that, let's look at our first stock here, NEO. I'll go to Thinkorswim here from TD Ameritrade. So as you see here, we got a squeeze chart here. Let me type in NEO. So as you can see here, NEO, nice looking chart here. As we talked about earlier, you can see here we got a 1 day, 1 year chart here. We got a squeeze forming indicated by a couple of red dots here. That tells you at this time there's a tight compression of volatility. Bollinger Band is within the Kelton channel. So, and then as it happens, look at the shorter term A wave. So that's below zero. You see a red bar below zero here, below zero line. That tells you in the shorter term there is some weakness. But as you look at the longer term a C wave is above zero. Even though it's a little bit negative, John Carter says pay attention to whether it's below zero or above zero. It's clearly above zero. So with that, it's really a candidate that you could go long and buy call or call option or even stock outright, because this is a great stock. And as you see here, earnings has already happened, so you don't need to worry about earnings. It was on 8/11 couple days ago. And also as you see here, IV percentile is low. That's what we want when you buy stock or call option. If it is low volatility, it's always good. And VWAP is 41. That tells you even though currently stock is at 41.03, stock wants to go higher, at least to 41.18. And RSI is 40. That tells you right now stock is oversold. It's good to buy the stock or call option or a call. So with that, all coast is clear for NEO. And as you look through the 3-day chart here, 2-year 3-day chart, we also have a squeeze forming in this chart here. And when the squeeze is forming, the longer term C wave is above zero, and the shorter term A wave is barely getting to be above zero. But because C wave is above zero, we could buy NEO at these levels. And then we got other two charts here. Nothing great, there is no squeeze forming in these charts, but if you pay attention to the longer term C wave squarely above zero, that tells you longer term horizon for NEO is positive. So you always have to trade at in the direction of the longer term trend, which is bullish. That's why I would initiate a buy position for NEO, either stock itself, call or call option. And what you can also do is look at how it responded to this squeeze in the past. As an example, if you look at the daily chart, we got a squeeze here, and when the squeeze happened, the A wave is above zero, and boom, stock went up very nicely. As you can see here, from this point went up nicely. And as as it's going up, pay attention to the wave here. As wave becomes a little bit dark blue, that's when you take off your position, and stock came down promptly. And again we got one more dot here, and stock went up again, and a couple of more dots, one more dot here. Clearly, because it's becoming a little bit dark blue, stock came down. So this is how you kind of read through this and make sure you pay attention to the longer term C wave and and play in the direction of the C wave. So with that, let's look at one more chart here. We got a little bit bigger chart for NEO. Nice looking chart as you can see here. And there's some weakness after the earnings as you can see here. These are weakness related to earnings. This is where we can come in and see if it's a good time to buy. On the balance volume perspective, it's pretty steady volume. That's a good to go. And RSI is pretty low. It dropped off. This is when we want to buy. When the stock is oversold, we can come in and buy some. And from a DMI perspective, it's bearish right now. The red line is above blue line. That means it's bearish right now. It's good to buy when the market is so bearish and hold for a while. And as you see here, histogram, IV percentile is low. The actual IV is below historic IV. That tells you if you buy call option now, you're not paying too much. And then you got check-in money flow, pretty stable here. Smart money is flowing into the stock. So with that, now let's go into option chain here and look at NEO. Typically, I like to buy options more than 95 days out. And if you're not an option person, you could buy stock here. Anytime NEO is below 40, I always buy this stock. You could buy the stock outright by paying $39.39. If you don't want to play a stock game, you could buy option. So you could go here, look at delta 70 here, 69 is good enough. You could buy here, pay $9.05 and buy this call option. So if you buy this call option here, you'll make profit if the stock stays above 44.05. And the expiration date is, as you can see here, we are in this cycle here. 19 November is the expiration date. By 19 November, if the stock stays above 44.05, which is a little bit above the current price, you will break even. And you'll pay $905 to buy this call option. If the stock stays below 44.05, you will lose your $905. Every dollar the stock goes up by, this call option will go by 69 cents because that's the delta of this call option. So this is one way to play. So if you don't want to play the options game, or just a single option, you could buy spread. That will limit your risk and also limit your reward. So with that, given stock is at 41, you could buy 30, 35, 45 call spread. So for that, I would go here, look at 35 here, and just buy call spread 35, 45. So if you look through this here, it's a $10 wide spread as you can see here, and you're paying $5 or $5.03. This is a double your money type play here. It's a $10 wide spread, you're paying $5, remaining $5 is your profit potential. So if I confirm and send here, you're paying a little bit less money because it's a spread here. You're paying $503, and if you will make $497. So it's really double your money type play, a little bit less than doubling, but double your money type play. So as you see here, your break-even point came down now because you're bringing in some money by selling a 45 call also. So with this, your maximum profit is 497. Your break-even is below the current stock price. So this is a good way to play if your account size is small and you don't want to take too much risk. So with that, you could confirm and send this and go from there. So we'll look at one or two more stocks and go from there. So as you scan through here, I have listed multiple stocks here, and also I have listed if there is squeeze in the one-day chart, or if there is a squeeze in the weekly chart or a monthly chart. So we looked at NEO here where there's a squeeze in the weekly chart, and we could also look at a couple more. So Tilray as examples, stock has been dropping off of late. We could look at Tilray and see what to do. I have not highlighted Tilray as you can see here because right now Tilray may not be a good stock to buy, from a TTM squeeze perspective, but there are some internal details that we can look through. Sometimes even though there is no clear signs of purchase, you could still buy by making some judgments. So with that, let's go to Tilray. So Tilray, let's go to TTM squeeze chart here. So as you can see here, Tilray IV percentile is very low, 5.7. VWAP is 13.56. That tells you currently stock is at 13.30. Stock wants to go higher. And we got RSI 38.33. Tells you stock is completely oversold. So as you can see here, right now there is a red dot. That means there is a tight compression of volatility. Stock has to release energy, go up or go down. And by looking at shorter term C wave, looks like it's above 0, 0.97097. That tells you shorter term it's bullish. Longer term, this is where you have to pay close attention. So longer term, the A wave is below 0. Even though it's below 0, it's a light blue. That tells you still bullish at this time, but it's below 0. If you go by John Carter's methodology, by the books, you will not buy this because it's below 0. But it's bullish because it's the light blue, not dark blue. And as you look through here, you can see here there's a dot dot dot, and there are a series of dots here, and the C wave or a longer term A wave is below 0. Stock is kind of coming down, but the C wave is a little bit light blue. So that's why some of these these type of situations, you could also look at the color of the A wave, and also look at how it's going. Is it kind of curving and going up, or it's coming down? So in this case, it's kind of showing you it's curving and trying to go up slowly. It's a light blue. You could read into this as it's a better long-term play versus shorting this Tilray at these levels. So in these type of scenarios, I would not buy options because with the options, if you don't have a clear signal, you could lose a lot of money. Instead, because it's a low dollar stock, I would rather buy the stock of Tilray at these levels and go from there. And as you scan through here, Tilray has not responded great. You have to look at the history of Tilray here. As you see here, we got a dot here, and when this dot happened, here you see it's below 0, but it's curving up. So if you look through that methodology, because it's curving up, you could buy to Tilray at this time and participate in the longer term growth of Tilray. This is why you can go by books. Sometimes you got to look at the shape of the trend also. Is it going up a little bit or going down? And if you just went by books, you would have missed it here because it's really below 0, but it's curving up. And then you got one more dot here, and when this dot happened, it's above 0, but you can see here there are some lighter blue shade going on. It's curving down. That's why stock promptly came down. And even though by the books it's above 0, you would still lose money because it's curving down. And then we got one more dot forming here. It's light blue. This is why probably it's a good time to buy now, because it's light blue and it's trying to go up in the shorter term. So this is how you should look at historically how the stock has responded to these squeezes, and pay attention to that too. And now we look at a different chart of Tilray here. As you see here, stock, I think earnings has happened a couple of days ago, 728. Stock had done nothing for a while. It's again one of those meme stocks, as you know, and volume is steady. RSI is trending down. Right now bearish. The red line is above blue line, and volume is going into the stock. Check-in money flow is higher. Smart money is flowing into the stock. This is when you got to kind of go along with this smart money here and buy some stock. So with that, let's go into one more stock here. As you see here, we got a lot of them here. Um, let's look at one or two more. For example, we can look at VXRT here. VXRT is a $8 stock here. Very low sales, as you can see here. We got a squeeze in the monthly chart here. Typically, the squeeze in the monthly chart will last for a couple of months. So we could look at VXRT. So let me go to Thinkorswim here. So VXRT, if I look at a squeeze chart here for VXRT, um, so there's a daily chart. There's a small squeeze red dot here, tells you tight compression volatility or tight compression of volatility here. When this happened, shorter term A wave is about zero, longer term C wave is about zero, coast is clear. Also IV percentile is low, 14, RSI is 53, little higher, but I would take it. I would, it's a good time to buy VXRT because the stock itself is very low from a price perspective. You could buy stock outright. And as you look at the weekly, a 3-day chart here, again, series of red dots, and the longer term C wave is above zero. It's a bullish, meaning light blue. Short term A wave is also above zero, bullish, which is yellow. And as you scan through here, we got a dot forming, squeeze forming in a weekly chart. And when this happened, the longer term C wave is curving and it's trying to go above. Right now it's below, but trying to go above. As you can see, the shape of this chart trending up. And also shorter term A wave is above 0, 0.20. So coast is clear, even though the C wave, longer term C wave is below 0, because it's curving up, you could buy the stock. Same story monthly, we got a squeeze forming here. When this happened, as you can see here, the shape of the wave is trying to go up, so you could buy this stock VXRT here, against the normal grain here, because normally you would want to see this wave above zero, but we also pay attention to the shape of the wave, and you could get ahead and buy some VXRT. Because stock is so cheap, I would buy some stock outright instead of doing the call option, which may not be the right thing to do in stocks like VXRT. And this is also one of those meme stocks that jumps up and down, as you can see here. That's why stock could be a better idea here. And then we'll go into a couple more here. um, I also love PagSegur, a great fintech play based in Brazil. As you scan through here, IV percentile is 15, which is low, and RSI is 60, which is a little bit higher on the side. We got a squeeze in the 3-day chart. You could buy some PAGs also at these levels. And if you go to PAGs here to Thinkorswim, so as you see here, IV is very low. IV percentile is 15. That tells you you're not paying too much money for the option premium. And as you see here, VWAP is 58.25. Stock probably want to come down a little bit. That's why it's lower than current stock price. RSI is 60. It's a kind of on a higher range. Typically, we want to buy when RSI is lower. But as you scan through here, we got a dot forming in the 3-day chart. When this happens, the longer term C wave is squarely above zero. And as you pay attention here on the monthly chart, C wave is above zero. Weekly chart C wave is above zero. Monthly chart also C wave is above zero. Clearly, this stock wants to go up, so I would buy stock outright here, just a $58 stock, or buy call or call option. One thing notice, stock has gone up off late a little bit. There may be some temporary weakness you might want to buy into, but either way you can buy the stock. It's a great stock. So with that, let's look at one more chart here. So as you see here, stock has done nicely. It's clearly above its 200, 150-day moving average. And as you scan through here, nice volume here on the balance volume tells you people are buying this stock. RSI is 60. Typically, I would like to buy stock when RSI is below 55. I would have bought, in right here, maybe right here. Typically, when it's below 50 or 55, that's when I like to buy. And clearly, from a DMI perspective, we had a positive bullish crossover. This blue line is crossing over red line. That's a bullish crossover. That's a good sign. And smart money is kind of flowing into the stock pretty steady here. This is why, as you look through here, we had the earnings also here just last week. So coast is clear. You could buy some pags, because of this temporary weakness here, and hold it for a while. So let's now jump into option chain here. Pags, you could buy some stock outright, 62.50, and go from there. If you want to play options game, I would go at least 95 days out, or even 158 days out if you want to. If you go 95 days out, you could look at delta 70 call options. Right here, 72 is good enough. Pay $9.70 and buy this call option. So as you can see, you're paying $9.70. Profit potential is infinite, and this is one way to play. And with this, every dollar the stock moves, your option will also go up. I think right now it shows 72 or something, I guess. Every dollar stock goes, option will go up by 72 cents or so. Your profit potential is infinite. As stock goes up, you'll start making nice money, but your break-even point is 62.60. Stock has to go above 62.60 for you to make money. And that's one thing to watch out for. And if you want to, if you want to play a different game, meaning a spread game, you could do that. It will reduce your risk and also reduce your reward. So if you want to play options, stock is at 58. You could do maybe 55.65. So with that, if you see here, we got 55 right here. You could do this 55.65. There you go. So you're paying, it's a $10 spread, you're paying $4.50. The remaining portion of your $10 spread, which is $5.50, is a profit potential. It's a, make double your money type play here. So if you confirm and send here, right now your break-even point is 59.50, which is just above the current stock price, and you're paying 450. That's your max loss. Your max profit is 550. This is a play to do if your account size is a little bit lower, or you don't want to pay too much, you don't want to risk too much capital. That's the strategy to do. So you could also do a smaller spread if you want. You could do 55-60 spread, play with just $5 spread. So if you want to do that, you could do 55-60 spread. You pay 260 here. The remaining portion of $5, which is $2.40, is your profit potential. Almost double your money play. If you confirm and send here, now your break-even drops below the current stock price. A little more conservative. You pay 260 to make 240, almost double your money type play here. So this is also good if your account size is small. And with that, let's jump in and look at one or two more. As you can see here, you got stocks like Sorrento, and also Clean Energy. Some of these stocks are meme stocks. You could buy the stock outright and hold for a while. And we also have DoorDash here, which is DoorDash is a higher dollar stock. To play stocks like DoorDash, you could do options spread, so or even options for that matter. So that way, you don't pay too much money buying stock outright. For DoorDash right now, IV percentile is not applicable here. RSI 66. Let's look at DoorDash quickly and see what's in store for DoorDash. So DoorDash, as you can see here, IV percentile is 41.40. VWAP is 189. That tells you stock wants to go down right now. Even though it's 194, VWAP is 189. So it's a good support at 189. RSI is 65.6. So with this, we have a bullish sign here. As you can see, we got a dot here and we got bars on above zero and trending up. It's a good signal for you to buy. As you look at the long term, the bars are above zero, even here. So with that, you could initiate a call or a call spread here. Before that, let's look at one more chart here. So as you scan through DoorDash, nice on the balance volume, people are buying into the stock. RSI is trending up. For me, I would not buy stock here because as you can see here, every time it hits the red line here, it wants to come down a little bit. I would rather wait a little bit for DoorDash to become, from an RSI perspective, to drop a little bit before I buy. And if you look at the DMI here, right now a bearish crossover is in the works, meaning the blue line wants to go below, red line wants to go above. When they cross in this fashion, it's a bearish crossover. On the contrary, smart money wants to go into the stock. That's why check-in money flow is positive. So in this scenario, there is no clear sign. I would rather wait for RSI to drop a little bit and then get into this stock. Next, we look at probably one more here. Let's go to the next slide. We got a lot more stocks here. We got ZTO, Peloton. Peloton, as you can see, our IV percentile is low and RSI is also low. I would rather go with Peloton and initiate a position in the Peloton because of this low IV percentile and low RSI. Let's look at Peloton quickly. And let's look at the squeeze chart here. Looks like Thinkorswim is thinking. All right, let it take some time. In the meantime, let's go back to the chart here. As you can see here, we got Peloton, could be a good one, mainly because IV percentile is low, RSI is also low. And as you scan through here, we got a couple more here. Even the Western Union, same story. SID, again a material play. And we got a couple more here with the EIX, GNOG, and so on and so forth. You could play, same scenario. Look at this, how AWAV is doing, and when the squeeze happens, if the AWAV is above zero, if the AWAV is above zero, and more importantly, the longer term C wave is that's above zero, you should go long. And depending on how much capital you want to invest, you could do either a call outright or buy the stock outright or do the spread game like we talked about. With that, let's do one more look. Looks like Thinkorswim is a little bit slow here. Probably internet connection is a little bit jittery. So with that, let's wrap it up. Thank you very much. Happy investing and trading. Please subscribe.